Have you ever wondered how the world's second largest economy, China, could possibly falter? It seems unfathomable, doesn't it? But, as the saying goes, even the mighty can fall. And in this case, we're talking about a giant, a behemoth, an economic powerhouse that has been a driving force in shaping the global economy. Let's take a moment to appreciate just how massive China's economy is. It is the world's largest exporter, the largest manufacturer, and has the largest population of any country on Earth. In terms of sheer size, China's economy is only surpassed by the United States. Yet, despite its colossal size and influence, China's economy has been showing signs of slowing down. Now don't get me wrong, a slowdown doesn't necessarily mean a collapse. However, it does indicate that the giant is struggling. So, what's causing this struggle? Well, there are a few key culprits. First, there's the issue of debt. China's debt has been growing at an alarming rate much faster than its economy. And as we all know, when your debts outweigh your income, that's a recipe for disaster. Then, there's the problem of an aging population. China is facing a demographic time bomb with a rapidly aging population and a shrinking workforce. This means fewer workers supporting more retirees, which puts a strain on the economy. Lastly, we cannot ignore the impact of trade wars. The ongoing trade disputes with the United States, among others, have hit China's export-dependent economy hard. Now, these are just a few of the factors contributing to China's economic slowdown. There are many more nuances and complexities to this issue, which we will delve into in the upcoming scenes. So, we see that even giants can stumble. But what does this mean for the rest of the world? Well, grab your popcorn and stick around, folks, because we're about to dive deep into the ripple effects of China's economic struggle. Stay tuned. Did you know that China's economy didn't always hold the number 2 spot? In fact, it was once among the poorest nations in the world. Astonishing, isn't it? This dramatic transformation was driven by several pivotal policies and strategies. Let's take a step back in time. In the late 1970s, when most of the world was progressing at a rapid pace, China was struggling. Enter the open door policy. This policy opened China's doors to foreign investment, and boy did it make a difference. Fast forward a decade to 1988 and we see the reform and opening up policy come into play. This further liberalized the Chinese economy, leading to an influx of foreign businesses and a boom in domestic entrepreneurship. China climbed the economic ladder, from a struggling nation to the world's second-largest economy. From rags to riches, China's economic journey has been nothing short of impressive. But now, it faces a new challenge. What happens when the world's factory starts to close its doors? Let's delve into the global implications of China's economic slowdown. First, let's talk about global supply chains. Over the decades, China has intricately woven itself into the fabric of global production, becoming the linchpin in a complex web of international trade. From electronics to automotive parts to textiles, China's production machine powers businesses across the globe. An economic slowdown in China has the potential to disrupt these supply chains, creating bottlenecks and shortages. Next, we have the world markets. China is the world's second-largest economy, and a significant player in global financial markets. A stumble in China's economy could trigger a domino effect, leading to a fall in global stock markets and a potential economic recession. The shockwaves of China's slowdown could be felt in your own portfolio, whether you invest in stocks, bonds, or commodities. Then there's international relations. China's economic power has allowed it to wield significant influence on the global stage. However, as its economy slows, its diplomatic leverage could potentially diminish. Tensions could escalate as countries scramble to renegotiate trade agreements and rebalance power dynamics. Lastly, let's not forget the developing countries that rely heavily on Chinese investments. These countries, many in Africa and Asia, are particularly vulnerable. China's investments have been a lifeline, fueling growth and development. With China's economy slowing down, these investments could dry up, stalling progress and growth in these regions. To put it simply, an economic hiccup in China isn't just a local issue, it's a global concern. The intricate web of interconnected economies means that a slowdown in one corner can reverberate across the world. So, what happens when the world's factory starts to close its doors? The answer, as we have seen, is a domino effect, a chain reaction that could disrupt economies, alter power dynamics, and stall growth worldwide. As we can see, a slowdown in China's economy doesn't just affect China, it sends ripples across the globe. So, what's next for the giant? As we move forward, the future of China's economy remains a topic of intense speculation and interest. The path to recovery won't be easy, but it's not impossible either. China, after all, is known for its resilience and adaptability. Economists and experts from around the globe have been weighing in on the possible scenarios that could unfold. Some believe that China's economy may bounce back through a combination of internal reforms and strategic international collaborations. A focus on digital innovation, green technology, and increased domestic consumption could play a crucial role in this recovery process. Others, however, foresee a more challenging journey ahead. They caution that the economic fallout from the recent downturn could linger for a while. To navigate this, China might need to rethink its economic model, shifting away from the export-driven approach it has long relied on. There's also a school of thought suggesting that China could leverage its position as a global manufacturing hub to reinvigorate its economy. By fostering innovation and improving product quality, China could potentially regain its competitive edge on the global stage. In the realm of finance, there's talk about China potentially opening up its markets more to foreign investors. This could bring in much-needed capital, stimulate economic activity, and help restore confidence in China's economy. Of course, these are all speculations, and only time will tell the true course of China's economic future. It's a complex puzzle with many moving pieces, and the solutions will not come easy. But one thing is certain: China's economic moves will have a ripple effect across the global economy, influencing markets and economies far beyond its borders. While the future remains uncertain, one thing is clear: the world will be watching China's next move.